There is a file with your name on it. You did not create it. You did not authorize it. You have probably never seen it. Right now, as you watch this, 3 private companies are maintaining that file, updating it automatically, selling it to strangers, to your bank, to your landlord, to your employer, to your insurance company, to anyone who pays them for access. These companies are not government agencies. They are not regulated the way banks are regulated. They are not accountable to you. They are accountable to their shareholders, and their shareholders profit from the file, whether the file is accurate or not. The 3 companies are called credit bureaus: Equifax, Experian, TransUnion. Between them, they hold financial files on nearly every adult in America. In 2022, Equifax alone earned $5.3 billion. Experian earned $6.6 billion. TransUnion earned $3.8 billion. Combined, $15.7 billion in 1 year. Selling files on people who never chose to be in the system. You are not their customer. You are what they sell. And 1 in 5 of those files, 1 in 5, contains an error significant enough to cost someone a loan they deserved, an apartment they qualified for, a job they were hired for. 40 million Americans carrying invisible damage in their file, damage they did not cause, damage most of them do not know exists. How did this happen? When did it become legal for 3 private companies to build a permanent file on every American and sell it without their knowledge? Who decided this was acceptable? What can you do about it right now? This is the story. Stay with me, because by the end of this video, you will understand something that $15.7 billion in annual profit depends on you never understanding. Part 1. Diana. Her name was Diana Reyes, 34 years old, registered nurse at Northwestern Memorial Hospital. 8 years of night shifts, 8 years of perfect payment history, 2 children. She had been saving for 2 years for this move. 3 bedrooms, good school district, a park 2 blocks away, close enough that her children could walk there on their own. She submitted the rental application on a Wednesday morning. The property manager called her on Friday afternoon. "We have reviewed your application. We are unable to offer you the tenancy. Our decision was based in part on information in your consumer credit report." Diana had never missed a rent payment, had never been late on a utility bill, had held the same credit card for 6 years with a perfect record. She asked which bureau the landlord had used. TransUnion. She asked for a copy of the report. What she read made her hands go cold. A collection account, medical, $340, listed as unpaid since 2001. Diana had been in a car accident in 2001. Medical bills came in. She paid every one. Her insurance covered the rest. But here is what happened. Before her insurance payment arrived, the hospital sent one bill to a collections agency by mistake. That bill was $340. The insurance then paid it. Diana had paid it. The hospital confirmed the debt was gone, but the collections agency never updated their records. They never told the credit bureau the debt had been paid. So for 2 years, the bureau kept selling Diana's file to anyone who paid. And her file said she owed $340 she did not owe. The landlord paid for her file. Diana's children did not get the park. She disputed the account. Filed on November 7th. The law says the bureau has 30 days to investigate. That means 30 calendar days. Every day counts, including weekends. Day 30 passed. Nothing. Day 37. Nothing. Day 44. The account was finally removed. Day 44 was too late. The law says 30 days. The Bureau took 44. That is a violation of the Fair Credit Reporting Act. Diana did not know that. She did not know she could have legally forced the removal on day 31. She did not know she may have had the right to financial compensation. She found another apartment, smaller, farther from the park, $340 more per month, for 2 years, until she found something better. $8,160, paid because a $340 debt that was never hers stayed on her file for 2 extra weeks past the legal deadline. Diana Reyes is not unusual. She is one of 40 million. 1 in 5 American credit reports contains a material error. Material error means an inaccuracy significant enough to affect a lending decision, enough to deny a loan, raise an interest rate, block an apartment, cost a job. 1 in 5. And most of those 40 million people will never know the error exists until the damage is already done. Because the system was not designed to protect you, it was designed to profit from you. Part 2. Where this system came from. To understand what credit bureaus are, you have to understand what existed before them. In 1869, a group of Brooklyn merchants began meeting monthly. Some customers were not paying their bills, so they started sharing names. John Miller on Fulton Street owes $40, 3 months unpaid. The other merchants wrote it down. This list, passed around a back room, was the first credit bureau, not built for consumers, built by merchants for merchants. By 1890, these lists had become an industry. Chicago had grown from 30,000 people in 1850 to 1.1 million in 1890. A banker could not personally know every borrower anymore, so they paid for the lists. And one company grew faster than all the others. The Retail Credit Company of Atlanta, founded 1899. They did not just collect debt information, they collected everything. Employment history, marital status, whether you drank, whether your children caused trouble. Paid investigators interviewed neighbors, sold those reports to banks, insurance companies, employers, anyone who paid. No rules, no oversight, no right to see your file, no right to correct errors. The name Retail Credit Company of Atlanta may not be familiar. They changed their name in 1975. They are Equifax. Part 3. The file nobody could see. By the 1960s, the Retail Credit Company had files on millions of Americans. Not just financial records, their character, their habits, their marriages, and nobody had the right to see what was written about them. No right to correct errors, no right to know it existed. In 1969, Senator Proxmire of Wisconsin called a hearing. Investigators obtained their own credit files. What they found shocked a Senate committee. Errors, personal judgments presented as facts. One senator's own file said he had a drinking problem. He did not drink. Congress moved. October 26, 1970, the Fair Credit Reporting Act. The FCRA was the first federal law to regulate consumer credit reporting. For the first time, you had the right to see your file, dispute errors, and know when it had been used against you. The bureaus created the problem. The FCRA was the law designed to contain it, and 50 years later, Diana paying $8,160 for a debt that was never hers tells you how completely it has been contained. Part 4. How the machine works today. The modern bureau does not have investigators. No one knocks on doors anymore. The system is automatic. Every time you use credit, every payment, every missed payment, every new account you open, every application you submit, a data file moves automatically from your bank or lender to all 3 bureaus simultaneously. The banks and lenders that send your data to the bureaus are called data furnishers. They furnish, meaning supply, your financial information to the reporting system. You never see this happening. You agreed to it in the fine print of every credit agreement you ever signed, probably without reading that section. Almost everyone signs it without reading that section. The bureaus compile this automatic data into your credit report. Your credit report contains your name, every address you have ever used, your social security number, your date of birth, every credit account you have had, every balance, every credit limit, every payment, every missed payment, going back 7 years, every bankruptcy, going back 10 years, every time someone has requested your credit report. This report is then sold to anyone with what the law calls a permissible purpose. Permissible purpose means a legally recognized reason to access your report. Banks reviewing loan applications, landlords screening tenants, employers conducting background checks, insurance companies calculating premiums. Your bank buys it, your landlord buys it, your employer may buy it, your insurance company may buy it. The business model. Your data is collected automatically, sold for profit. You receive nothing. You cannot opt out. You are not their customer. You are what they sell. $15.7 billion. To put that in context, the entire budget of the Consumer Financial Protection Bureau, the federal agency created specifically to protect Americans in the financial system, is approximately $700 million per year. The three bureaus earn 22 times what the agency protecting you from them spends. The entities being regulated outspend the regulator by a factor of 22. Part 5. Why America and not everywhere else? Germany has credit bureaus. Japan has credit bureaus. But the American credit bureau system is the most commercially powerful in the world, and among wealthy democracies, the least regulated. The geographic reason. America is a continent being settled at industrial speed, strangers doing business across thousands of miles. When you cannot personally know someone, you buy a file on them. The credit bureau was the answer to that problem. The political reason. After World War II, Europe had a painful memory. Governments in Germany and the Soviet Union had kept secret files on millions of ordinary citizens. The Nazis used personal records to identify and persecute people. East Germany's secret police, the Stasi, had files on 1 in every 63 citizens. Neighbors were paid to spy on neighbors. What you said, who you met, what you believed, all in a file. When World War II ended, Europeans decided this could never happen again. They built laws to protect people from having their personal information collected and used against them. In 2018, the European Union passed a law called the GDPR. Here is what it says in plain terms. Any company that collects information about you must tell you what they are collecting and why. You have the right to see what they have. You have the right to correct it. You have the right to delete it. You own your data, not the company, you. America never passed a law like this. The FCRA, the law we have been discussing, gives you the right to see your credit file and dispute errors. But it does not give you the right to delete your file. It does not give you the right to say, stop collecting information about me. It does not give you ownership of your own data. Most Americans want these rights. Polls show that 80% of Americans believe they should be able to see and control data collected about them. But the law has not been passed. Why? Because companies that profit from consumer data, credit bureaus, technology companies, data brokers, spent $29 billion lobbying Congress between 2000 and 2023. $29 billion. To make sure a law like Europe's GDPR was never written in America. One more thing almost nobody knows. Equifax is headquartered in Atlanta, Georgia. American. TransUnion is headquartered in Chicago, Illinois. American. Experian, the company holding a credit file on nearly every American adult, is headquartered in Dublin, Ireland. Not because of any American decision, because of a British acquisition in 1996. Your credit report, your mortgage eligibility, your apartment application, your job background check, partially operated by a company registered in Ireland. This is not a conspiracy. It is a consequence of a system built in the 1860s by merchants sharing a list that nobody was watching carefully when it was sold across an ocean. Part 6. The 6 things the law gives you. Diana Reyes got her dispute resolved. Eventually, on day 44 instead of day 30, $8,160 too late. She got the tools after the damage. You are getting them before. Right 1. The free annual report, annualcreditreport.com, the only website federally mandated to provide your free credit reports. All 3 bureaus, free, once per year, by law. Not Credit Karma, not any bureau's own website, not any other service. Annualcreditreport.com, only this. Pull this report before you apply for anything important. A mortgage, an apartment, a car loan, a job. Because what you find, you can fix. What the lender finds first decides your application. Diana found her error after the landlord found it. Pull your report first. Right 2. The dispute right and the 30-day deadline. When you find an error, dispute it directly with the bureau, online, by mail, or by phone. The bureau has 30 calendar days to investigate, not 30 business days, 30 calendar days. Count every day including weekends and holidays. During those 30 days, the bureau contacts the data furnisher, the bank or lender who reported the information, and asks them to verify it. If the data furnisher cannot verify, the bureau must remove it. If the bureau fails to complete the investigation within 30 days, the information must be removed regardless. Diana's bureau took 44 days. That was a violation. If you are approaching day 30 with no resolution, send a written certified letter to the bureau on day 28. State the date of your original dispute. State that the 30-day legal deadline is approaching. Demand resolution. Put them on record. Most people do not do this. The ones who do get faster resolutions. Right 3. The consumer statement. If a dispute is not resolved in your favor, you can add a 100-word statement to your credit file. Your explanation, your side, in your words. Attached permanently to the disputed account. Visible to every lender, landlord, and employer who buys your report. This right is almost never used. It changes the context of what a future buyer reads. Use it. Right 4. The adverse action notice. Anytime a lender, landlord, or employer takes an adverse action against you based on your credit report, they must notify you in writing. They must name which bureau provided the report. They must tell you that you have the right to a free copy of that report within 60 days. This notification is called an adverse action notice. When you receive one, it is not rejection correspondence. It is a map. It tells you exactly which bureau, exactly which file, exactly what the system is seeing. Diana received one. She used it. That is how she found the $340 collection account. That map cost her $8,160 because she received it too late. If you receive one, use it immediately. Right 5. The security freeze. A security freeze, also called a credit freeze, prevents any lender from accessing your credit report, which means no new credit can be opened in your name. Which means if someone has your social security number and tries to open a fraudulent credit card, a fraudulent car loan, a fraudulent mortgage, they cannot. Because the bureau cannot release your file. Free to place, free to lift. Permanent until you remove it. This is the most powerful identity protection tool available to any American. It takes 15 minutes to place on all 3 bureaus. Most Americans do not have one. We will cover the credit freeze in full in video 29. For now, know it exists. Know it is free. Know you can place it today. Right 6. The 7-year rule. Most negative information, late payments, collections, charge-offs, must be removed from your credit report after 7 years. Bankruptcies after 10 years. After those limits, the information cannot legally appear. If it appears after the legal time limit, that is a FCRA violation. You can dispute it for immediate removal. You may be entitled to damages. Check the dates on every negative item in your report. The 7-year rule is one of the most commonly violated FCRA provisions, and the least enforced, because most people never check the dates. Final act, Chicago, 2005, 2 years after the Lincoln Park apartment. Diana pulled her credit report, found another error. A credit card account listed as open that she had closed in 2002. She disputed it on day 1, followed up on day 25 with a certified letter, resolved on day 29. No damage, no cost, no apartments lost. Because she pulled the report before anyone else did. Because she knew the deadline. Because she knew the tools. On the day the second error was removed, she called a colleague who had just been denied a car loan. "Pull your report," Diana said. "I didn't know I could," her colleague said. "Most people don't," Diana said. "That's the problem. The file with your name on it exists right now, being updated, being sold, whether you know it or not, whether you look at it or not, whether you authorized it or not. The bureaus built the system. Congress gave you 6 tools to operate within it, and a $15.7 billion industry is built partly on the assumption that you will never learn to use them. The file is theirs to sell. The tools are yours to use. The only question that has ever mattered is which one of you acts first." Annualcreditreport.com. Pull all 3 reports, free, today. Read it before a landlord does. The file exists whether you look at it or not. The difference is whether you find the error first.